This was a very meaningful Tesla earnings call because the company is definitely signaling where the future lies and also delivering some of the metrics and numbers, and also investing the kind of capex and in the kinds of products and services that are necessary to make that reality, to make that future a reality. And it's like Lars, the chief engineer, head of production, he said we're a transport as a service company. So that is Tesla going forward, at least part of the Tesla business. There's more to it, but transport as a service. There's energy also, there's robotics, there's energy, space energy, things along those lines. But what matters now for the stock and for investors is transport as a service. And that means that you want to build a network of self-driving cars that is managed by an AI, Grok, and maintained by Optimus, by robots. That's roughly what it means. It requires charging, it requires cleaning, it requires charging stations, it requires a management software. So who's going to actually coordinate all these cars? Who's going to run the underlying algorithmic dispatch of cars? Where should they be at what time? And what should the pricing be? So those are all problems that need to be solved. And the deck starts, the shareholder deck, with a statement that actually every company should have, but not most companies have, because I think most companies are complacent. Tesla says that we want to focus our efforts on the limiting factors for the realization of our future. What that means is that, for example, if lithium hydroxide is a limiting factor, that's refined lithium that goes into batteries, and no matter how much you talk about EVs and growth and green energy and whatnot, if you don't have that type of product, you can't build proper batteries, and therefore you don't have an EV business. And if you don't have an EV business, you don't have a transport as a service business. So what you do, you build a refinery, and that's the refinery we visited in Corpus Christi. We spoke about this also on our trip to Texas a few weeks ago. And this is a sort of reiteration of that particular topic that we spoke about back then, which is like you build a supply chain and you think, how do I optimize for regret? That's another way to think about it. When you're building a future that is uncertain, you can't optimize for metrics that are that are fixed, because you don't know what the metrics will be. You don't know exactly what how many batteries you're going to need, how many Optimus you're going to need, how many cars. You don't know. Do you need 2,000 cars in Austin or 3,000? You don't know these things. But what you might know, or what you have a good sense for, is that you're going to regret not having lithium hydroxide access if, let's say, there's trade barriers in China, or if China retaliates by not sending this stuff to us, because we don't have it. We're the only factory in the US that has lithium hydroxide. So this is part of the logic here that Musk is talking about. But I think more importantly in this call, I mean, we knew all these things, right? This is not what this call is all about. What this call is about is that they are transitioning their reporting and their messaging and the story of Tesla. The story of Tesla is now, we're a transport as a service company. So what we need is, we need FSD, we need subscriptions, we need Cybercabs, we need chips, we need AI chips, we need charging stations, and we need autonomy across the value chain, and also across, what that means is it's not just enough now to have self-driving cars. What you need is Grok to manage a fleet of millions of self-driving cars, which is the goal. Musk's compensation states that he needs to have 1 million robotaxis on the road on a 3-month period. I don't know the exact definition, but let's just say there should be an average of 1 million robo-taxis going around, cybercabs actually, or robo-taxis, both, doesn't matter. They should be going around and delivering services to customers. So if you want to have that kind of scale, you need something to manage those cabs. Like you need an algorithm that dispatches those things. That's going to be Grok. So what I mean with value chain is like you have to think about that. This could be a regret. This could be a limiting factor. What if you need a huge operation just to maintain this? Then of course, the whole Optimus purpose of Optimus, in my opinion, right now is to serve this network. That's why there is this perfect overlap between what Tesla's doing with self-driving and cybercabs and Optimus, because Optimus will manage the charging, the Optimus will manage the cleaning, and probably many other things, service, things along those lines. And that's where Optimus is going to be deployed. And that's why I think Tesla has an edge also relative to other companies, robot companies. And Musk was asked about this. Robot companies, for example, in China, they're very good at making robots. Some companies are incredibly good at making AI, but nobody really has a purpose. And I think what's driving the future of almost any company is the purpose, right? It's the goal. It's the having a purpose that's worth working for, that a purpose that can be monetized, of course, and that also has value. And this brings us to, this is just a side note, but I still want to mention it. Like if you want to think about the actual purpose of a company and the value creation of a company, and if you also want to actually put in a political dimension here, which is, okay, well, what if Musk becomes a trillionaire? How is that even socially responsible? And the way we think about this is that we think that if you create value for society, let's say that's X, and Y is the value that you capture, and if X is at least 10 times larger than the value that you capture as a company, then that's fine. Because, again, you have to create, 10x more value, at least, if not more. And that's where a lot of companies fall short. That's why, companies like Facebook are hated, because what's the value creation of Facebook? It's certainly not 10x. Facebook is a company that is very good at capturing most of the value for itself. And similarly, Google. I mean, Google is, you can argue, there is some value there, certainly more than, they don't capture most of the value, but they're also not 10x. And then you keep going. Maybe Amazon, I would say Amazon, the jury's out there, in my opinion. There's not a lot of value creation there on the online business, but certainly on the AWS business. So that's why Amazon's being tolerated. So anyway, long story short on that front, I think as long as you can create massive amounts of value for society, I think it's fine for a company to generate a lot of value also for itself and for its owners. Now, what that means for Tesla specifically is transport as a service is really a massive deal. Like if you think about it, we are primed as human beings forever. I mean, if you look at, I just watched the documentary about Cornelius Vanderbilt, one of the biggest, maybe first big sort of entrepreneurs of the United States in the 19th century. And what he built was the railway network and transportation. Transportation is a big deal. People like to go around. It's in our DNA. It's always been like that. And for a long time we were confined to horses, and then we had trains, and then ships, and then cars and airplanes. Now, transport as a service brings a couple of dimensions to transport. It brings, first, lower cost, right? It's lower cost because once you can scale it up, kind of like AWS or these types of cloud-based offerings, where you take something that has been owned and you make it as a service, it just becomes cheaper because the provider can sort of centrally manage the unit cost and use a lot of leverage, use a lot of AI, use a lot of technology to lower the cost. So the individual is having lower costs, but also, of course, most importantly, the utilization is much, much higher. than if you own a car. We all know we own a car, we only use it maybe 2 hours a day and things like that. So, so in order to provide that transport as a service, so like you have to really build a supply chain around a lot of potential limiting factors. It starts with the lithium hydroxide. Then we have the battery production. Then we have the actual car production, Cybercab. We have the chips that are necessary to drive this car, and also add the kind of intelligence that we envision, because this is going to become more than just transport, right? It's going to become partly entertainment, but also partly a lot more than just transport, like, take me to the next best doctor, I'm sick, help me out with this, I need to go visit my wife in her office, and I don't know where to park. Can you find me a parking spot so I don't pay too much? Like, there's a lot of more intelligence that can be added to the car, but for that it needs to be sentient, and it has to have semantics, and those things are very difficult, and they have very high compute budgets. So that needs to be solved. The limiting factor being the chip. AI 5, 6, and plus are meant for the car, and then of course also for Optimus. You need these robots to manufacture, you need these robots to maintain, particularly if you have millions of cybercabs around the world delivering transportation services to people. You're gonna have to need you're gonna need millions of people or robots to maintain those cars, to clean them, to fix them, and that's going to be a challenge that Tesla is attacking with Optimus. So I think they gave us a very good sense for where the limiting factors are. They gave us a very good sense of also what they want to do, right? Listen to the companies, listen to what they say. They often do what they say, particularly companies like Tesla. So just listen to them. It's fine. You don't need to play 7-dimensional chess here. They just tell you what they want to do. We want to be a transportation service company. We want to optimize to minimize regret. So we want to make sure that we're not limited by some factor, like whether it's lithium or AI chip or the ability to maintain something or all those things. And then once all of that is provided for, once the network is built, the service is built, the capex is spent, or the factories are built, and demand is either there or it's not. And to some extent you can manage that also by having a compelling product with lower cost and higher value. At some point demand is attracted by that, so it's like a magnet. But of course you can't, you just have to, that's the risk, right? That's the long shot. That's why in our model we have a plus 20% discount rate on the Tesla stock, because there is risk, right? I mean, maybe people don't want to do it, maybe it doesn't work, maybe the weather somewhere is bad and then people don't want to use it, so you can't use it in the northern hemisphere. I don't know. So there's certainly risk. There's a lot of uncertainty. They don't know everything. These people, they're just humans. They go to work every day like everybody else. But there's a good chance that they're doing the right things. I want to say one more thing here, which kind of stuck in my head, and that was the mentioning of geopolitical risk. Musk spoke about this a few times, and through his proximity with Trump, I think we probably know where that's coming from. So he said, look, a lot of companies are complacent. They don't think too much ahead. They take what they have and build a business and grow, and that's fine, and generate value for themselves. But what we're doing is we're really thinking way ahead, and we are building an infrastructure that will provide for something that nobody is even thinking about right now, and that manifests itself best in the chip business, where Musk went to TSMC and all the others and asked for much bigger production, and they don't want to do it. They want to grow at their pace, which is fine. That's perfectly fine, and I understand why they're not jumping on the bandwagon. And so Musk's doing it himself, the same that they did with batteries. We spoke about this also in the past. Just want to reiterate it here. So when they built the first gigafactory in Nevada, that was the same concept. Like, they had Panasonic as a partner. Here it's Samsung. So they pick a partner that's maybe not number one in the business, and they tell them, look, how about we grow together? We're going to provide you with the ideas and also with the demand, and you build CapEx and you do what you are best at, which is, let's say, in the case of Panasonic and the batteries, was actually building the battery cells, and in this case, it is actually building the chips, so the fabs and the wafers and all of those things that are necessary to build the chips. So to summarize, this is, I think, one of the pivotal calls of Tesla. It's the first call where they fully transition to an autonomy-only company. They are offering the metrics like FSD subscription. They have now 14.2.2.6, I think, which is pretty much close to, I mean, it's unsupervised self-driving right there. I mean, even my Hardware 3 car is amazing what it can do, but we're not even close to what actually is already possible. So anyway, the point here is that we're talking now about a transportation as a service company, a company that is focusing on its main metrics that it needs to deliver to minimize regret in realizing this future. So like we spoke about, all the potential limiting factors are being tackled. And I guess what that all brings us down to as shareholders is, of course, okay, where do we stand now? What exactly are we expecting? Our model gives us around $650 fair value. That means that we'd be sellers sort of around $900 this year, which is, you know, if we reach fair value and then we overshoot by 30%, then at some point, I think as investors, we probably would take some money off the table. And I think this is a very good way to think about the stock. Its price targets are useless, but at some point, somebody once said, I only care about the stock price when I'm a buyer or a seller. And I think for us, this is incredibly important, and that's the way we think about it. So we'd be sellers in the 900 range, which is, you know, kind of double from where it is now, because that's just the way we think about the company. Now, of course, if the stock went to, let's say, 700, we'd have to recalibrate. For example, we have very little for Optimus. We have nothing for AI data centers, things like that, which is tied to Optimus. We have nothing for the chip business, really. So we price the company the way we price Tesla now is a transportation as a service company. And there's an energy component, let's say $120 a share for energy, which is kind of related, of course, because you need energy for transportation. But of course, the energy part is much bigger than just for transportation. But I think we're still sort of struggling, and I think this is something we need to do in the next few days. You know, think about a model, how we would price this company now. It's difficult to price this company. I think the market's doing a good job, definitely giving Tesla a lot more value than it deserves based on its actual business right now, and that's because there is a lot of real options in the business, and I think that's fairly priced. The market's actually been always very good at pricing Tesla. And for us now to make money, I think what we need to see is adoption of FSD, increased unsupervised robotaxis, increase in the robotaxi fleet, more adoption of robotaxi, more market penetration in the markets where they are. At the same time, also continued growth of 3 and X sales, and then unsupervised FSD driving FSD adoption and also car sales. And then, of course, on the energy side, continuous growth in the energy business there. I think they keep talking about the low-cost competition, so there's definitely a risk there. I think Tesla can outdo that with things like the Megapack, so offer ancillary services and also solve the transformer problem, which is a big problem in the energy side. So again, to summarize, I think this is a very pivotal call, very interesting call also, and worth going through the deck because this is the first time Tesla is really doubling down and sort of sharpening its message towards a transportation as a service AI company. Thank you.